So if you could start a company and you could borrow $1 billion for free and buy Bitcoin, would you start a company, borrow $1 billion and buy Bitcoin?
Yeah.
And would you outperform someone else that took their own piggy bank and bought Bitcoin?
Yep.
Yeah. So it's a simple idea, but people sometimes struggle with that idea, which is a corporation that has access to the capital markets can get very, very cheap capital under good terms. So what we realized was there's a lot of people that want to, by the way, a lot of people want to borrow, they want to loan me that money. Like, because the convertible arbitrageurs, they can't buy Bitcoin and they can't even buy the equity. They actually want to buy the bond.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto. Michael Saylor, executive chairman of MicroStrategy, emphasizes Bitcoin's potential as a transformative asset, comparing it to digital gold. He highlights the importance of Bitcoin's capped supply of 21 million coins, drawing a comparison to fiat currencies that can be printed without limit by governments. The limited supply of Bitcoin contributes to its ability to maintain value over time, positioning it as a potential safeguard against inflation and a dependable asset for value preservation. Saylor emphasizes that possessing a small amount of Bitcoin, specifically 0.1 BTC, has the potential to significantly impact individuals' financial positions. This premise hinges on the concept that Bitcoin's limited supply, coupled with a rise in global adoption, is expected to propel its value significantly upward over the long term. With the increasing demand for Bitcoin, possessing even a minor stake may yield significant financial advantages, particularly as the asset's scarcity intensifies and institutional adoption continues to rise. His remarks highlight Bitcoin's distinct role within the financial landscape, presenting characteristics that exceed those of conventional investments. In contrast to traditional financial instruments such as stocks or bonds, Bitcoin operates on a decentralized framework, offers global accessibility, and demonstrates resilience against inflationary trends. The outlined characteristics position it as a compelling asset for those pursuing financial stability and expansion amid a progressively unstable economic landscape. Saylor's viewpoint underscores the overarching narrative of Bitcoin as a transformative asset class that offers individuals a distinctive chance to safeguard and enhance their wealth in the digital era. His claim that possessing merely 0.1 BTC could significantly alter one's financial situation underscores the substantial influence of Bitcoin's finite availability and its capacity to transform the landscape of personal finance, and lots of things Michael Saylor discusses, so please watch the video to end. And share this video and subscribe our channel, Everyday Finance. Thanks.
We initially started, our initial Bitcoin purchase was out of desperation. It's like, I just don't know what else to do anymore. This is my last idea, but I have nothing to lose and I'm irritated, right? And so we're going to do this. And then it became opportunistic. Our stock tripled and we could raise $650 million for 70 basis points, 75, effectively free money. I thought, okay, well, we'll buy Bitcoin with that. And then our stock rallied again and we raised $1 billion for free. And I thought, well, okay, now this is very opportunistic. Someone wants to give you $1 billion for a zero coupon to invest in something you believe in, you would take it. And then at some point it became strategic. We're just going to keep doing this. And we can do it with occasionally different types of bonds and equity and the like. And then 2024 came along and the question was, what is MicroStrategy's role? And some people thought, well, it's better to invest in Bitcoin miners or it's better to invest in Bitcoin ETFs. And MicroStrategy is just a holding company. And between the beginning of 2024 and the end, what we realized is, well, the Bitcoin miners have a business which is decaying. The protocol is decreasing their productivity 18% a year in Bitcoin terms because of the halving. And then the hash rate's exploding, which is decreasing their productivity, another factor. 20 or 30% a year because of the hash rate increase. So if you're an institutional investor and you like Bitcoin exposure, that's a big question mark. Whereas MicroStrategy was like a Bitcoin miner, but our productivity is decreasing 0% a year. And our Bitcoin is increasing 50% a year. So what the investors wanted was they wanted Bitcoin exposure with volatility and no headwind. And so MicroStrategy represented the volatility, more liquidity, no headwind, right? And the result is a lot of money rotated out of Bitcoin miners into MicroStrategy as we approach the halving. And we got this boost. And then when we got this boost, our premium to net assets expanded. And then because our volatility was high, we were able to go to the convertible bond market and we sold a convertible bond. And then Bitcoin exploded and we sold another convertible bond a week later. We did 800 million, then we did another 600 million. And then a quarter later, we did another 800 million. And then a quarter later, we realized, well, we could sell $1 billion of equity at a 2 or 3 times a massive multiple to our underlying asset value. So we could sell $1 billion of equity and we could capture a $600 million gain in a few weeks. So we did that. And then we went back to the convertible bond market because the bond holders wanted another bond. So we sold that and we upside it. It was a $1 billion bond at 80 basis points.
The recent decline of Bitcoin below $93,000 has drawn significant interest from market observers, with a considerable number sustaining an optimistic perspective on the cryptocurrency's future performance. Following its peak of $96,645 on November 22nd, Bitcoin underwent a significant 7% decline, reaching an intraday low of $92,700 on November 26th. Nonetheless, the asset demonstrated a swift recovery, trading at approximately $94,600, indicating a strong resilience in the face of short-term fluctuations. Experts view this correction as a typical occurrence within Bitcoin's historical trends, rather than an indication of diminishing momentum. Marcus Thielen, founder and CEO of 10x Research, identifies the recent consolidation as a result of seasonal market dynamics and overarching macroeconomic influences. Thielen indicates that Bitcoin frequently shows short-term weakness as the month concludes, presenting a chance to alleviate overbought technical conditions. He noted that macroeconomic factors, including the possibility of the Federal Reserve maintaining stable interest rates in the context of robust economic growth, may temporarily influence high-risk assets such as Bitcoin. Despite these challenges, Thielen conveyed optimism that Bitcoin is poised to exceed the $100,000 mark in the near term. Additional analysts share this positive outlook. Notable trader Blunts indicated that Bitcoin's present standing implies potential for additional upward movement, downplaying concerns regarding a more significant correction. The recent decline has been characterized as a short-term flush prior to the asset continuing its upward trend. In a similar vein, Charlie Sherry, the head of finance at BTC Markets, highlighted the cyclical nature of Bitcoin, characterized by significant upward movements succeeded by necessary corrections. Sherry observed that these pullbacks are not merely anticipated, but are crucial for solidifying gains and minimizing leverage, thereby facilitating long-term growth. The recent decline to $92,700 has been characterized as a final flush prior to Bitcoin surpassing the significant $100,000 mark. The rapid recovery of Bitcoin and its historical pattern of significant surges following corrections support a positive outlook in the market. The cryptocurrency demonstrates robust fundamentals and a growing interest from institutional investors, reinforcing its status as a prominent asset within the digital economy. Forecasts indicate that as Bitcoin nears the six-figure threshold, it will enhance its position as both a dependable store of value and a progressively recognized medium of exchange. The positive outlook is projected to continue past 2023 as numerous analysts anticipate substantial growth in 2024 and 2025, driven by increasing adoption, macroeconomic changes, and the evolution of Bitcoin as a recognized asset class. Should Bitcoin exceed the $100,000 threshold, it would signify a pivotal achievement, showcasing its resilience in the face of market fluctuations and solidifying its position within the global financial framework. Let's get back to Michael's Saylor interview.
And once we got through all of that, what we realized was our real compelling business opportunity is as a Bitcoin treasury company. What we're offering is securities backed by Bitcoin. The bondholders want low risk Bitcoin. The equity holders want high performance Bitcoin. Some people want high voltage Bitcoin. Some people want low voltage Bitcoin. The ETFs are offering raw Bitcoin, raw wrapped Bitcoin. So you're getting 55 or 60 volatility and 60 ARR, and that's raw. And MicroStrategy stock was offering you double that, or 90 or even 100, sometimes 120 vol and 100 to 120 ARR. So you're getting high, levered, high voltage Bitcoin. And who wants that? Bitcoin maxis. The only thing that's better than Bitcoin is more Bitcoin. Double Bitcoin. If you like the return of Bitcoin, how do I get double the return of Bitcoin? I know Bitcoin's going to go up 50% a year. I want 100. Why don't you want 100% a year if you can get 50% a year? Well, the answer is if you get 100%, if you want double, you're the degenerate and you're doing 2x leverage on Binance or FTX, you might get forced liquidated on a Saturday night. So you want 2x, but you want it with intelligent leverage. So intelligent leverage is I borrow the money for 5 years and I pay 0% interest and I don't pledge any Bitcoin as collateral, so there's no mark to market, so I never get liquidated. There's no margin call. So if you could start a company and you could borrow $1 billion for free and buy Bitcoin, would you start a company, borrow $1 billion and buy Bitcoin?
Yeah.
And would you outperform someone else that took their own piggy bank and bought Bitcoin?
Yep.
Yeah, so it's a simple idea, but people sometimes struggle with that idea, which is a corporation that has access to the capital markets can get very, very cheap capital under good terms. So what we realized was there's a lot of people that want to, by the way, a lot of people want to borrow, they want to loan me that money. Because the convertible arbitrageurs, they can't buy Bitcoin and they can't even buy the equity. They actually want to buy the bond, short the equity, so sell the equity, buy the bond, capture and extract the premium. And what they think is, well, I am buying a $50 million bond and making $6 million risk-free in 1 week.
The recent pullback in Bitcoin has elicited a range of responses, with experts providing measured yet hopeful forecasts. Charlie Sherry from BTC Markets observed that although the cryptocurrency is currently following a bullish trend, there is potential for a retest of critical support levels in the range of $88,000 to $90,000 should the downward movement intensify. A potential correction in the range of 20 to 30% could result in Bitcoin retracing to approximately $80,000, a level that remains consistent with historical patterns noted in prior bull markets. Sherry pointed out that the blockchain prediction platform Polymarket indicates a 72% probability of Bitcoin reaching $100,000 before Christmas, stating, "I like those odds." C.K. Shan, co-founder of DX2 Capital, highlighted the psychological barrier present at the $100,000 mark. It was indicated that certain long-term investors may realize gains as they approach this significant threshold, which could lead to a period of short-term consolidation. This consolidation indicates a robust market phase following Bitcoin's significant rally after the election. Retracement to the $80,000 level, according to his analysis, may serve as an optimal entry point for new long-term investors aiming to leverage Bitcoin's growth prospects. Sean conveyed optimism regarding Bitcoin's potential to exceed the $100,000 mark in the near future, bolstered by anticipated favorable regulatory developments from the forthcoming U.S. administration. These developments have the potential to drive both institutional and retail adoption, thereby enhancing the underlying fundamentals of Bitcoin. This perspective is consistent with prevailing market sentiment, which interprets temporary price corrections as opportunities instead of obstacles. Experts concur that Bitcoin's swift recovery from downturns strengthens its status as a robust asset class. Given the increasing engagement from institutions, supportive macroeconomic factors, and the potential for evolving regulatory frameworks, Bitcoin's outlook for the medium to long term appears strong. It is essential for investors to observe price movements attentively, as the current consolidation phase and possible pullbacks could present advantageous buying opportunities. The market is positioned for notable developments in the upcoming months, as Bitcoin's potential ascent to $100,000 could establish a foundation for ongoing expansion in 2024 and further. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.